If someone is too heavy on Bitcoin right now, they're probably not doing too well, but I hope everyone is doing well, and we're going to talk about Bitcoin. Today was a rough day, especially near the end of the day. The selling it was persistent. The selling just continued all day. So I want to talk about where I think Bitcoin's going and what are some strategies that you could use to profit from it. So I'll start by saying I do think Bitcoin is going even lower than where it is now. Let me pull up a monthly chart and I'll explain why. So here's the monthly chart. If you watched the New Year's video that I made, I posted around January 1st or 2nd, I was talking about the wedge pattern that was appearing on Bitcoin. And the wedge was these three pushes up here. And I explained in the video that when you get a wedge like this, you normally get a two-legged pullback. And that pullback lasts about 10 bars. So this is a monthly chart, so that would be about 10 months. So far, we're about 4 or 5 months in. On this monthly chart, it's looking to me like we may still only be on the first leg down. This selling, like I said, it's been consistent selling. It's been strong. It's been much stronger than I thought it would be. But 5 months of strong selling so far. Now, this might be the point where we would get a pullback, and then that pullback would then lead to a second leg down. And in total, this whole pullback would last around 10 months. So that's a possibility where these 5 bars down are the first leg. I think what's a little bit more likely is that we are already on the second leg. And so what that would be is the first 2 bars are leg 1, and then we see this pullback. And then what we're on now is the start of the leg 2. So let me go down to a weekly chart, and it's a little bit more visible on the weekly chart. Okay, so here's our wedge, 3 pushes up. And then now this pullback that started in October, this would be the first leg, and then the pullback from that bearish move down in December, then that's the start of the second leg down here. If that's the case, then we're actually getting pretty close to the lows based off of that. So there's leg 1, then you get your pullback, and then leg 2. Leg 2 puts us around 50,000. 50,000 is a big round number. It coincides with the prior lows from 2024. And something I want to point out is we're crashing through the 200 moving average right now, the 200 weekly moving average. If I add on the 300 weekly moving average, you'll see that is still below. And looking historically, the 300 moving average does have some tests on Bitcoin. So we back in 2019, 2018 test here, 2019 another test, bottomed here in 2022 around that 300 moving average. And to me, it looks like that's where we're heading. So we've had some strong selling already in Bitcoin. I think that we still have more left for the reasons I just mentioned, where one, not enough time has elapsed yet. We still have more bars that are needed for this wedge to play out. And there are important levels like 50,000 below. There's the 300 weekly moving average below. And we have this very visible measured move target that's going to be below around 50,000. Another reason why I think we might have more time in this sell-off is the Bitcoin stock to flow model. And you might be familiar with this chart. Now, I don't give too much weight to this model. I don't put too much importance on it. But there is something I want to point out is when you're looking at these colors, they represent the RSI, the relative strength index of Bitcoin. So the red is when the RSI is getting overbought, and the blues are when the RSI is getting oversold. And also each dot represents a month. So look at the prior times that we've had a color similar to the one that we're at, where the RSI is this light blue color. If you look at the last, you're going back the 10 or 15 years, whenever we've had this RSI that's around 50, we normally have a few months of continued selling or sideways movement. Back in 2015, we went sideways for 6 months, 8 months more. 2019 had about 5 or 6 months where it was mostly sideways. 2022, there were about 6 months there where the market was sideways to down. So based on both the technical factors on the chart and then on this stock to flow model, they're both pointing in the same direction, which is that we are going to continue to have a sideways to down market for probably the next half a year. And as that market pulls back, I think we're going to go pull back to the 300 moving average. I think we're going to pull back to around 50,000. So I think from the price that we're at now down to about 50,000, I think it's reasonable to try to be buying. And especially if it gets closer to that 55,000 or 50,000, be buying more aggressively. So what I would say is be dollar cost averaging now, start that now. And then if Bitcoin falls another 10,000, 20,000, then look to add on more serious positions. There's been a lot of talk as well about MicroStrategy and Michael Saylor. And MicroStrategy owns over 700,000 Bitcoin now. So they have almost 5% of the entire Bitcoin network. So naturally, the company is going to rely heavily on the price of Bitcoin, and the price chart will be heavily correlated. So MicroStrategy has been aggressively buying Bitcoin, and their average cost is 76,000. So Bitcoin in just a couple of days has blown through their average cost and is now $14,000 less than their average cost. They've been able to acquire such a large amount through convertible debt. So basically, they're taking on debt and purchasing Bitcoin with that. Now, there might be some worst case scenarios that you're imagining here. Well, if such a large company owns so much of the Bitcoin, and if Bitcoin is going down, and this company is basically leveraged, they've been taking on debt to buy the Bitcoin, they could be in some serious trouble. Perhaps some forced selling of Bitcoin could occur if Bitcoin goes low enough. Well, MicroStrategy, they've been smart in the way that they've went about taking on debt. So their debt is unencumbered. Unencumbered meaning that the Bitcoin is not liable to be taken. The Bitcoin is owned free and clear. That MicroStrategy owns that Bitcoin. No debt holders have a claim on the Bitcoin. So with the decline, investors probably will want their money early. And the earliest they can get, $1 billion payment could come due as soon as September 15th, 2027. And another $6.4 billion could come due in 2028. So those are really the timelines we're looking at, that if Bitcoin remains low for the next 2 years and these payments are coming due, then that's when MicroStrategy would really be in trouble. As if Bitcoin price is so low and they never sell any, it might be difficult to be able to get the money to pay off these debt holders. So in this scenario, even if Bitcoin falls to 25,000, 20,000, MicroStrategy is not immediately in trouble. They run into trouble if Bitcoin stays down near those prices for a year, 2 years. One way that I've heard thrown around to identify the bottom for Bitcoin is what is Bitcoin's average production costs. And so people that are claiming this as a way to find the bottom think that if miners have a certain cost to their Bitcoin, then that Bitcoin would find a floor there. So some people state that the floor is around 87,000, or I've also heard around 71,000. I've also heard around 58,000, and that would be for like a lower energy cost country. So they're trying to say the average cost to mine a Bitcoin, that's where the floor should be. And I just don't see that as holding up. If I want to sell my Bitcoin, if a lot of people want to sell their Bitcoin, they want to rush to sell it and they just want dollars or they want another asset, it's not going to matter what it costed someone else to mine that Bitcoin. It's only going to matter, am I willing to sell the Bitcoin at this price now? And if a lot of people say yes, which is what we're seeing happen, then that price will fall below the average production cost. So I just want to send out a warning that if you hear someone say, oh, Bitcoin's average production cost is 58,000, and so therefore it can't go below that, so I'm going to buy all that I can at 58,000. I'm going to leverage 1,000 to 1 because it can't go below 58,000. Well, that'll just be incorrect. So, don't fall into a situation where you're throwing everything at Bitcoin at a certain price that you think is the average production cost, because Bitcoin can fall below that price. The only thing that will really matter for the price of Bitcoin is what is the supply compared to the demand. If there are more people selling their Bitcoin for whatever reason, doesn't matter what's going on, if there's more people selling than buying, then the price will go down. It does not matter what the average production cost is. I mentioned that MicroStrategy might run into issues if Bitcoin goes down to 25,000 and stays there for a couple years. So here's what 25,000 would look like. 25,000 is only going back to 2023. It's only going back a couple years. So a fall like that, just heading back to where the price was a couple years ago, that is not a crazy thing. That is not unprecedented. In fact, look at the precedent that Bitcoin has already set. In 2013, we had an 83% decline in 2013, and that was followed by almost 2,500% rally. A 71% decline in 2014, 78% decline in 2015, 84% decline in 2018, a 72% decline in 2020. And you can see the percentage of rallies that followed those declines. So if we fall back to 25,000, there's not only a precedent for that, as 80% declines have happened several times in the last 15 years, but we're also only going back to prices from 2023. That's not that big of a pullback. Do I think we're going back to 25,000 right now? No, I don't. I think we're going to stall around 60,000, 50,000, somewhere in there. And then from there, it'll gain its feet over the next few months, couple years, and we'll continue to see higher prices. So I don't think we're going back to 25,000. But this should not be a surprise if this is not a monumental shock if Bitcoin does this. It's done it several times in the past, and it really wouldn't even be retracing that many months of price. So no matter where Bitcoin goes from here, I do think dollar cost averaging is appropriate. And I think making larger dumps into Bitcoin as it goes below 60,000, 50,000, I think that's appropriate as well. And just make sure you could weather that storm if it goes down to 25,000, 20,000, and don't have so much in it that would hurt you. If you're buying, you probably want to be able to hold for 10 or 20 years. And if that's not your mindset, then you probably should just forget it and not be involved with doing this. But if you want to buy, I think it is appropriate to be buying this at this time and over the next few weeks or a few months. Possible scenarios that we do get from here. Possibly tomorrow, Trump comes out and he says we're going to find the bottom on Bitcoin and we're investing heavily in a United States Bitcoin reserve. That's possible, and I'm sure we would see Bitcoin take off from here. You could see Elon Musk tweet, "I'm buying, a million Bitcoin or whatever it is," and the market would take off. Like there are scenarios where this bottoms here today and then we head straight up. However, for the technical reasons that I've stated, and then I just think that the market is under a lot of pressure right now. I think there's clear targets lower. So although there are ways to save Bitcoin right now, I think it's going to take several weeks to maybe several months, half a year or a full year or more for all this to really play out before Bitcoin really starts to see a clear trend up again. So let's lay out some options if you do want to be able to buy Bitcoin. Well, one is clearly that you could just buy Bitcoin. You can open up a crypto wallet, or you can open up a Robinhood, and you can buy Bitcoin on there. Now, if you're doing something like Robinhood, there will be fees that will eat into your Bitcoin purchase, and then fees when you want to go and sell it again in the future. So for that reason, I'm kind of holding off on buying any more actual Bitcoin itself, just because I don't want to pay a 2% fee round trip when I'm buying the Bitcoin. So other options, you can do a futures contract, which is more cost effective, and it's leveraged, so you can control your risk. You can increase or decrease the leverage that you'd like by having these CME Bitcoin futures. And you can see the futures just track the same way as the actual Bitcoin. Another way, and the one that I'll be looking at for the current dip that we're on, is buying the IBIT Bitcoin ETF. So it's the iShares Bitcoin ETF. Once again, you see it tracks very closely to Bitcoin. Now, anytime you're buying an ETF, you have to understand that there will be a small amount taken out of the price of the ETF, essentially every day. It's very minuscule, but over a year, several years, it'll add up, especially if you're doing a leveraged ETF. So if you're like buying like a leveraged Tesla ETF, if the Tesla price stays the same for 2 years, that ETF will gradually decrease in price. Now this IBIT, it's not leveraged, but it is still an ETF. And so a very small percentage of it will lose value over time, but it's so minuscule that it's really not worth worrying about. This is not a leveraged ETF, so those reductions in price just won't occur that seriously. So you can see here as an example, I have Bitcoin plotted alongside of the IBIT, and so Bitcoin is up 53% over the last 2 years, and IBIT has actually outperformed Bitcoin. So IBIT is up 55% over just going back 2 years. So my plan is as Bitcoin falls below 60,000, gets near like 55, 50, I will start buying calls on IBIT, buying in the money calls on IBIT. So here's an option chain on Robinhood, and I'm looking at a year out expiration, January 15th, 2027. And what my plan would be is I want IBIT to get down around 30. And then from there, I'd be looking at buying the strike price of 25. Okay, and this is an in the money call. It's when the stock price is above the strike price. That is an in the money call. Why do I want to buy an in the money option? Well, the delta is very high, which means that most of the movement in the price of the option will be based on the price of the underlying. So the price of this option will move much closer to the price of the IBIT, and it will not matter as much the other Greeks like theta and vega. So the time that is left and the volatility that is in the market, those two factors are much smaller influences on the price of the option. Because I don't want to have to worry about, oh, what's the volatility doing? How much time is left? I just want the option to track very closely with the price of the underlying. So let me show you how this works. And over the winter, we've had some snowy days. I've had some time to make an options calculator. And I've been wanting to do this for a while, and I finally got around to it. And you'll have access to this as well if you watch until the end of the video. What makes this tool so great is when we're looking at the example of IBIT, we're wanting to see if we buy the call and the price goes down or the price goes up, or if the volatility goes up, or if 12 months go by and nothing happens, what will the price of my option be? Well, this way you can put all of your variables in and it'll tell you what the price of the option will be. And it also tells you the Greeks, so the other variables in the options price. It tells you that in the bottom right down here. So let's look at this example. We have IBIT. The stock price is right now about 35, and the strike price that I'm interested in doing is 25. We have 12 months to expiration. This 3.65, that's the risk-free rate. And then we have volatility of 68%. And you can find that implied volatility by going to your trading platform and going to the call that you're interested in, and they will tell you your implied volatility. All right, so right now we can see if we wanted to buy that strike price of 25, a call would be worth about $14.40. Now, let's look at some scenarios. Let's say we buy it and let's say 8 months go by. So the call has 4 months left. And during that time, the Bitcoin rebounded. Bitcoin went up 50%. So that means IBIT would go up about 50%. That'd put it around $52. So let's look at that. So now we can see that we bought the call for $14.40. Now it's $27.45. So we almost doubled our money from holding the IBIT calls. And what's great about this is we put in our time to expiration as 4 months. So that means the 8 months went by, And then this calculator is showing us that given all the change in the variables, then it outputs what your call will be worth in 8 months from now. Let's say instead that Bitcoin, even in 8 months, is still lower. And let's say it's right at, let's say it actually goes through our strike price. Let's say it goes to 24. What would it be then? Okay, so $3.45. So that's starting to become a pretty big loss. And so this is why this is a great tool. You can consider all the different outcomes, and you can know what the price of your option will be. And another feature of this is that it tells you your intrinsic and extrinsic value. So not only is this a great tool for just trying to figure out the price of your options, but if you're learning options, this is a great way to just play around with it and just see how all the numbers fit together. Like, what is intrinsic value, extrinsic value? How does the volatility, the vega, how does that impact the price of my option? So this is a wonderful tool for someone wanting to learn options at any time of day. They can just go in and input their numbers, and it'll tell them what the price is. Okay, so I'll have the link in the description, and when you click on that link, if you want to use this options calculator, it's going to take you to the WAP store, the big guy's WAP store. And on here you'll find the trading course, and the calculator, that's going to be free. So we'll see here, you go over, click on files, and basically this is just a link. It's a URL, so you'll click on it, and once you open the link up, you say, yep, we'll open it. And like I said, it's just the text to the link, and then that pulls it up. And there you go. Then you have access to the options calculator. And you can see I have 3 different spots down here, so multiple people can use it at once. And so yeah, there you go. Hope you guys are able to use that tool. So guys, leave it in the comments. Where do you think Bitcoin's going? Are we going down to 25? Are we going to 0? Or are we doubling over the next year or two? You know, what's happening? Leave it in the comments and let me know. Also, if there are other stocks that you want me to comment about, let me know, and I can probably make a video of it. Okay, thank you guys. See you next time.